Good morning, everybody, on this fine Saturday. Here in Denver, we got about 8 inches of snow last night, and this weather is crazy. Um, it is a good day for me to review with you how I blew one of my Lucid 50K Evals yesterday on Friday. And I wanted to share it with you because I think, if nothing else, uh, misery loves company, I suppose. So yesterday morning, I was coming into the open. I trade the open. I'm here in Denver, and so I also work a full-time job. And so 90% of the trading I do is from 7:30 to 8 o'clock. Now, I may take one or two more trades in the day, but it's when I'm at work and if I can get away and all of that. So I trade the open every morning. And because I'm here in Denver, it's 7:30, which is good. Yesterday morning, I was $500 or so shy of passing my first eval in Lucid, my first 50K eval in Lucid, and getting my first funded account. So I was kind of excited. I went into it. I was just going to play that account till I passed, and then I was probably going to be done for the day at that point. So I was $500 shy. Now, I play two strategies. That's all I play um, when I'm trading my morning session. The first strategy I call an open play strategy, and that is based on the opening candle and the follow candle. I get in or I don't. And so it's a break of structure strategy. And without getting into detail on the specifics of my strategy, a break of structure candle is defined as any large price move candle that breaks through a predefined level on your chart. The idea is for a break of structure candle, it typically means that it's going to trade in that direction at least for a short amount of time. And as a scalper, a short amount of time is all you need. Well, I come into the open yesterday morning, and right here, this green candle right here with the large topping wick and large bottoming wick, by my definition, is a break of structure candle. Okay, the open candle is a break of structure and it's green. So my strategy is simple. If it's a green break of structure candle, I will get in on the follow candle after a short amount of time for giving it some time for a pullback. I will get in for a long of 15 to 20 points. That's my strategy. I'll either get a win or I'll get stopped out. The other part about my strategy is if I get stopped out, I'm done trading the the open play strategy, and I will wait for my second strategy, which is just a standard reversal strategy. I'm not going to get into those. I want to go over the trades that happened. So this is a break of structure candle. So right off the bat, I was committed on this candle. I was going to get in for a long after a sufficient amount of time to see if it was going to pull back, and how much, trying to get my best entry. And I was going to get in, but instead of 15 to 20 points, I wanted to get my everything I needed to pass my eval. So I had my profit at $520. Now I was trading one contract. Now I'm on the minis. I don't trade the micros typically. So I was on one contract. So let's just say $500 on one contract is 25 points. So right off the bat, I was already outside of my strategy, but I played it. All right. I had my, I had my my profit target. I had my stop loss, so I had standard stop loss, $400, and so I got in on the candle. Long story short, it did not go up. It went 15 points. It went 15 points in my favor. So I would have gotten a win on that candle if I had played my strategy rules as they were set. but it didn't hit my profit that I had ad hoc made to simply pass the evaluation. And so it stopped me out. Well, on the open play strategy, when I define a direction, more times than not, and by that I mean more than 80% of the time, the follow candle will eventually go in the same direction as the open candle if it's a break of structure. And so as I got stopped out, I broke one of my other rules. I, I I looked at this, and because it wasn't at the time, it wasn't below the low of my 21 moving average, I tried to time another entry, all right, for a long. I, I got in, and again, it didn't work. You see what this thing did. It broke all the way down. This is 100 point. This is a 20, 40, 60, 80. This is a 100-point candle. I'm looking for 15 when I follow my rules. And so, long story short, I got stopped out again. So now I'm down 800 bucks. I had two losses. I'm down 800 bucks. And at this point, I did stop. I said, okay, I'm done with the open play. I'm just going to wait and see what happens. And if you see here, regardless of all these topping wicks, and I mean, it was whipping back and forth and back and forth and back and forth, always coming back to this level right here, this 24,680 level. And it was holding that level. And then this candle happened and it popped back down again. It came back up and it started going up. And so this reconfirmed my initial thesis that in general, things are going to go up for a while. And so this candle happened. Boom. And I mean, it broke through everything. Here's another 100-point candle. All right. It broke through everything. And so what did I do? I transferred my open play strategy into this point in the morning. All right. Now, in many ways, this break of structure in any scenario will be played by day traders because they're going to see this. And again, for a break of structure of this magnitude, the next candle may pull back a little bit, but the consensus is going to be that it's going to continue up. All right. Now I want you to look at something. It did continue up, but not before this candle comes in and it starts pulling back and I get in for a long. It freaking stops me out again. And now I'm at 1,200 or so dollars. Also, now I'm getting pissed off. And I'm like, well, I'm either going to make my money back or I'm going to lose it. So I jumped in again and it stopped me out again. And by this time, my brain is like, okay, I mean, there's no way that this thing's going to come all the way back down here. Take out all of this break of structure candle and then some. It broke down below the 21 moving average on the close. And I'm like, okay, I've got one more trade at this point. I've got one more trade. And I was like, okay, um, with it coming down and breaking down from this break of structure, breaking through and closing below the 21 moving average, I'm like, okay, well, maybe it's going to go down. So guess what I did? I got in for a short. I got in for a short. The rest is history. Blew my account. Now, I did all this to simply say that it doesn't matter. It does not matter what your strategy is. It does not matter how consistent it is. It does not matter if you have a wonderful risk tolerance management plan. It doesn't matter how profitable you are. It all comes down to your ability to control your emotions in the moment. And that's as simple as that. So, yesterday, for this Lucid evaluation account, it's blown. I've got three others because they had a really good sale going on. But that's neither here nor there. It's blown. And it's because I ended up dancing with Peggy. If you haven't watched any of my older videos from my old channel, I'm going to introduce you to Peggy because she is the number one reason that we fail as traders. Peggy is pride, ego, greed, and impatience. That's Peggy, and that's what we all deal with. I'll see you on the flip side.